Good morning. Morning, everybody. Hopefully you're awesome and well. Marvellous Monday. Got a few people on already, so big hello to you. Who we got? We got Brandon. Mate, good morning. Always up bright and early. James, always here. Kevin, in the evening over in Florida. Mate, awesome. Oh, David, thanks, mate. Good to see you online again this morning. Bradley, he's here too. Jeff's in the house. Got Scott. Jeff. There we go. A few people online. Hey, welcome along. Good to see you. Fantastic to have you here. Hey, morning, Alison and Alex. A few of the regulars, which is awesome. But if you're new, hello to you. If you are new, Sharon, good morning to you. If you are new, hello. My name's Jason Witten. Right there. It says it on the screen if you didn't already know. We've been doing some wealth coffee chats for a little while. What is a wealth coffee chat? Well, it's having a coffee in the morning and chatting about property investing. Been a property investor myself for a little while now, helping property investors just like you, maybe mad keen about real estate, work out how we can go the distance in this thing called property investing, because it does take a little bit of time. So if you're new, if you're popping by, if you're new to our coaching and mentoring program, or you've just found us, well, just give us a shout out in the chat. Let us know where you are on this wonderful Monday, which part of the world you're dialing in from. Good morning, Deb. Good to see you. All right. Today I thought we'd talk a little bit about the idea that conventional wisdom, I know I wouldn't even call conventional wisdom, conventional communication says that if the interest rates go up, then all of these people are going to be in desperate times when it comes to their mortgages, and they're all going to sell. Melbourne, new record. Yeah, above reserve. Oh, that'd be... Jeff, where's that one? I want to get that one. I got one here that was 500 above reserve. Yeah, well, there you go. Well, Jeff, you're in there with me this morning about what we're talking about. It's an interesting conversation, or pontification, right? So let's talk about this. Let's be practical. Let's go, all right, all these people are going to sell. What's going to happen? Now, by and large, I don't think that's going to happen. There may be some people under some financial duress or stress, sure. However, I don't think it's going to happen en masse like the media wants us to have a think about. Tell me, in the chat, we've got a home owner, and they are paying a loan or a mortgage. Now that loan goes up, and at the moment, folks, that loan goes up, and let's say, I don't know, let's say it goes up a fair bit. Anyway, whatever dollars amount that it is. And listen, there is some financial, increasing pressure on some people in the marketplace. But let's just say, you know, we've got somebody, they say, right, that's it, we're out, we're going to go, we're going to do something else. What's the challenge? What market are they going to enter if they go ahead and sell? Like, and put this in the chat for me just for a second. So, someone for a homeowner to get to a point where they're under that much duress to sell their property, well, that's I think we're a long way from there. But let's just think about this. Let's think about this strategically. What market are they entering when it comes to a market on the other side? If they go ahead and sell their property, what will happen on the other side of this? They've got to move somewhere, obviously, because you never know. Most of the people who would buy their property would be owner-occupiers. But what do they need to do? They got to move from a loan, okay, which is a certain amount of dollars, and then they got to move and they got to rent, right? Now, in the rent world, and I'll get somewhere with this, so just stick with me. In the rent world, are the rents going up, sideways, or down? Put that in the chat for me. Someone's going to leave maybe a higher interest rate, a mortgage, and they're going to go out into the world, and they're going to go to look for a property. Tell me in the chat, are the rents going to increase? Are they going to go sideways? Or are they going to go down? They're going to go up, right? And so right now, for many people, and you go do the math, and if you sort of don't believe me on this one, go, like I increase heaps indeed. Get out on the weekend. Here's something that you should do as a property investor. You should go to every 6 months, you should take a weekend and go to open homes, right? You should go to open homes, either in areas you're investing in or thinking about investing in, and or in your own area, and really feel what's going on out there actually on the ground, right? On the ground. Go to an open home and try and rent or find something that you would be happy to leave your house, your wonderful home, for, and go and rent, right? So, and the quality, the supply of rentals, so the dollars is going to go up. Now, the supply of properties that they could choose from, folks, tell me in the chat, is that increasing? There's heaps of choice. What's happening with supply? So rent's going up. The supply of choice of properties is doing what? Up, down, or sideways. And for interest sake this morning, that's going up. That's going down, right? And I'll show you in a minute. It's going down significantly. Put that in the chat if you or something if you disagree, right? So the supply of properties, the supply of choice is going down. So rent's up, supply down. If you were in this situation, what would you do? What are most people going to do? And I saw this in the GFC, folks. When this is the time I can correlate this, and I know a few of you online now, you were around in the GFC days with me. What did people do? There you go. The owner of the property wouldn't give you a 12-month lease. Yep. It's there, folks. And I'm not saying it's not challenging. I'm just saying these are the facts. All right. These are the facts. So the rent's going to go up continuously and continue to go up, especially if the interest rates go up a couple more times, which they will. I don't think we know where it's going, folks. The supply is down. The supplies continue to go down. And, now someone's here sort of, caught between a rock and a hard place. What will property owners do, folks? What will property owners do? What would you do? You're caught between a rock and a hard place. You've got a little bit of a squeeze going on. What would you do? Tell me in the chat. What would you do before you sold your home? Before you got yourself in that pressure? And I know what I would do, and I know what many people did in that GFC. Well, they sold all of the things that they didn't need. So they sold cars, cut back on expenses. Right now, that's what you will see. You will see, and this is kind of what this is what the RBA wants from the general populace in a very rough and ready way, where they put the interest rates up and they hope people stop spending money on things, right? They'll sell things, they'll cut back, they'll tighten the belt, et cetera, et cetera. So in reality, we haven't seen that happen yet, and there's talk about this, interest rate cliff and all that. It's just rubbish. It's just rubbish. Anyway, you got what I'm saying here. Where's the facts, Jason? You can talk a bit of coffee malarkey. Let's have a look at the facts. Well, let's just look at this, folks. Right. Let's have a look at what's just happened when year on year. So from last year, right? So January 22, this is the number of listings, new listings. January 22 last year. And you have a look at the listings to Jan 23, folks, right? Down, right? We have had a reduction in listings, monthly change, like 27% in Melbourne, 20% in Sydney, in the places where, we're looking at investing. The significant reduction in listings, properties for sale on the market. What happened? The interest rates going up hasn't flowed. Oh yeah, everyone's going to sell their properties, anything like that. All that's doing is properties being taken off the market, or people going, there's nothing to buy, so why would I sell? They would cut back expenses, they knuckle down, they stay where they are. We're in a very, very, very low supply chain part of the market, folks. Check out this. And this is one of the research websites that I use often. And you guys might know this one. I'll whack it back there. It's called SQM Research, right? So over here, let me see if I can get this a little bigger. Can you see that okay? Let me go a bit bigger. Here we go. That's much better. Let's go and scroll up there. This is the total property listings right now on the market. And you can see over here, these from the last, we had a bit of a shock. Oh, that's a bit of a shock. The interest rates have brought a little bit on, and then it's chilled out. And actually now the number of listings has gone down, and the number of listings gone down for apartments as well as houses, right? So we've got low listings, and in reality, the listing amounts across the whole market, pretty interesting. You go to places like Melbourne, like I said, like the 27% down in listings. Check out the drop from here, doosh down, right? You have a look at that. There was like 15,000, and then down here 6,000, and that's done by the number of properties on the market. You can switch it to houses and apartments, but look at that, folks. As we go, you can see the drop in properties listed, right? So, are people selling? No. At this moment in time, I didn't scroll up. Are people selling? No. They are not selling right now. What's actually going on out there in the marketplace? Well, let's have a look at this. And again, I'll do a little zoom in, but stick with me on the idea here, folks, for a moment as we go. If we look in here, you have a look of the direction of the asking price of properties. Because what happens, the most indicative, I said this not so long ago when we had a bit of a chat, maybe a week ago, maybe 2 weeks ago, the most leading indication of the health of the market, the property market, is the asking price, the direction of the asking price of new things coming to market, right? And, we do have the capacity now using the right tools to see that direction. And if you have a look, you know, every now and then there's a little sort of hiccup and people like, oh, the interest rate started to rise, the asking price went down a little bit and then it just started to go up, 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 up. The asking price of a property for sale. Now that there's a couple of things that go in there, less properties for sale on the market. The people who are selling, by and large, aren't being forced to sell, et cetera, et cetera. Anyway, have a look at that direction, the asking price of properties on the market. Now, if we go down here and have a look at, all right, let's have a look at, Sydney. Sydney's always a big behemoth. It has some big swings and roundabouts. Look at this, the asking price dipped in here, popped back up, and then, started to go in a direction which is, the last little bit down a smidgen. Not the end of the world, but down a smidgen, right? Check this out. Why has now 2-bedroom units all of a sudden started to accelerate upwards? Tell me in the chat, why did the house price drop, which is pretty significant? House price, average house price, asking price, not median price. So of the properties listed for sale on all of the websites, Domain and realestate.com, folks, in Jan, the average asking price 1.752, and then in Feb, the average asking price 1.71. Okay, so dropped 40 grand, 50 grand. Average asking price, not the end of the world. However, why now did the apartment price go from 776 up to 811? Tell me, what do you think? And again, this is just looking at some data and going, what's going on here? Why do you think the apartment price might have kicked on a little bit, folks? Tell me in the chat. Why do you think the apartment price kicked on a little bit for Sydney? And we could have a look at all the other stuff as well. But the point is, team, that for all of us, there's some good data to have a look at. Competition houses are too expensive, dead right, Sharon. So, people are looking, can't necessarily afford the house, but so, dead right, affordability. So they get themselves into, let's say, an apartment. And you'll see a bit of that. You'll see those, you'll see that choice happen, folks, for a lot of people. You'll see that choice happen, folks, for a lot of people. Check out this stuff here. Here's what's going on. In the, more vendors withdraw their properties, after the latest RBA rent increase. But someone selling got $500,000 over the asking price. Jeff said before, $1 million over the asking price. High profile trophy homes defy the downturn. An 80% clearance rate on the weekend for these properties. 3 children couldn't find anywhere to rent, so their father bought them a $3.8 million terrace home to live in. There's money out there, folks, in the marketplace. The point of this morning's chat conversation is interest rates going up does not directly correlate into everybody running for the hills and selling their properties at cheaper prices, okay? And I've had a few conversations about people waiting around going, oh, you wait till the end of the year, we'll nick a property. Now, that might happen. There might be a person who has to sell for some, reason that they're willing to walk away and drop their prices. But I just don't see it. I don't see the supply of the market allowing an oversupply of properties as we go into the future. Anyway, did that make sense? Did that make sense this morning? Let me know. Thought that would be worth chatting about this morning on our Wealth Coffee Chat. Other than that, folks, I think we're done. 8:30, Wealth Coffee Chat done and dusted. Join me tomorrow for another one. If you've ever got any thoughts or ideas or you want me to talk about something, let me know. We do it 8 10 each morning. So join me. Make sure you put on the reminders or whatever that is in the socials. But let me know. Join me each weekday for another Wealth Coffee Chat, folks. That's about it from me. You guys be awesome, be well. Thanks for dropping by, and see you guys. Hey, mentoring's on tonight. If you're not already signed up for mentoring night, make sure you do. Sam, myself, and Tab will be there, and we've got some good things to talk about. Don't miss out on that one, folks. All right, see you soon. Bye-bye.